All right, just when we thought the Bulls on Friday, and if you hear me say today, I'm referring to Friday. I don't usually record the day after, so just bear with me. But on Friday, we saw finally a pre-market that was red. I don't know the last time we saw a pre-market that was this deep of red. And this was only based off the employment numbers. It's actually kind of impressive when you really think about it because even GDP didn't drop numbers as much. GDP pretty much unofficially confirmed that we were in a recession, and just some unemployment numbers that missed put us down I think it was 1.1% by the time we opened. But at open, I pretty much predicted that we were going to see a pretty big rise. I thought we would stop at 412, but the Bulls had um, other other ideas. So the interesting thing about today, or Friday, I mean, was that we actually hit at this point right here at 11:15, 11:30, and also right here at 2:15-ish. We actually hit extreme bear momentum, which I don't know the last time we've seen extreme bear momentum, but even more impressive than that is the fact that obviously you can see both times we hit that extreme momentum, the Bulls just ripped it back green. This time right here was actually right before Biden spoke, so I'm not kind of surprised about that. They usually do that. But here I am a little surprised about this. I did expect us to come back down and test this 409 level by end of day. I'm very impressed that the Bulls was able to bring this back up and almost make it a green day. But there's a couple interesting things that you can't see, but I'll talk about real quick. I put it in my daily TA that I post on Discord and Reddit. But yet on Thursday night when I was doing my CPI post, which is on Reddit and also on the Discord, the market had priced in a 50 basis point hike as an 87% chance. By end of day on Friday, it was now 48% chance. So it's actually a higher percent chance that we see a 75 basis point hike now in September. Remember, there's no FOMC in August, it's in September. So we'll have another CPI before that September meeting. This is interesting to me because obviously the markets was not expecting these employment numbers, and I'm really curious what's going to happen with CPI on Wednesday. If you read my CPI post, you know I'm pretty bearish for this week ahead, and I'm seeing more stuff now this weekend that's even further making me be bearish. A lot of Fed members are coming out saying inflation hasn't peaked, we're not under control. I think on Monday and Tuesday, we're going to see a huge media shift from everything's fine to, oh crap. But it'll be interesting to see. I don't think the markets, judging by the last 8 weeks now where we've been running like crazy, have actually priced in the fact that inflation's not peaked, employment is not helping with interest rate hikes, and that the Feds are not going to pivot. This last little bull run that we're on right now that has been going on for a while, I am convinced that the markets think the Feds are going to pivot, and that's why we've been going on such a crazy run. But I don't think I don't think the Feds are going to pivot now. So it's going to be interesting to see what the narrative shifts to this week. The other really interesting thing, and this also happened on Friday, Thursday night, the consensus for CPI that's coming out this Wednesday, August 10th, was 8.9%, which is below the previous CPI of 9.1%. However, they are forecasting a 9.1%, which would meet the previous CPI. Friday during the day, I wish I knew what time, but I don't know if there's a way to even see what time they updated this, but they actually dropped the consensus from 8.9 to 8.7%. I've actually never seen the consensus and the forecast be so different. I mean, it's nearly a 0.5% different now. So I think Wednesday, regardless of which way it goes, is going to be some big fireworks. It's either going to beat the forecast and it's going to be something like 8.5, 8.6, and markets are going to pretty much rally to 430, 440, or it's going to be 9, 9.2, 9.3, something bad, and we're going to see the capitulation that we haven't got yet. It's going to be a repeat of right here in June where it just dumps. It'll be interesting to see what happens. This is going to be a pretty interesting week if you ask me. All right, let's get to the market now that we're done through that. So Here's the SPY daily. We'll talk about SPY, then we'll go to futures, and then we'll go to Apple, and I'll briefly touch on VIX. So if we zoom out here, you can see, I mean, we're still in this downward trend. I mean, this green line right here, this is the weekly analysis. So those of you guys have not tuned in or read my weekly analysis, I go way more in depth on these days than I do just on my nightly TA. So we'll look into a lot more levels and bigger picture and things like that, and some longer horizons and things like that. So this green line right here, solid one, this is essentially the bear market's over, bear market's not over for SPY. For next week, what's Friday? Next week, Friday is the 12th, so that would put us testing 432, 443, 433 by Friday. If by Friday we're over 433, essentially the bear market's over. Now that doesn't mean we're going back to all-time highs like 490 or whatever, 480. That just means that the bear market's over. So we'll probably, we'll find a level and we'll just continue to bounce through that. This red line right here, this is the more interesting one that we zoom in here. These red solid lines here. It's forming a nice symmetrical triangle, and if you saw the 15-minute while I was talking at the beginning here, it's pretty much this triangle right here. So it might not happen on Monday, but by Tuesday we're going to get a decision. So important levels to watch for Monday are going to be 414, which as you can see has been decent resistance on the 29th, the 1st, the 2nd, and we bounced off it here on the 4th. And even yesterday, Friday, 414 was a tough battle for us. And then support is going to be down here at 410.3, which was an important level that we did bounce off of quite a few times on Friday. So 410.3 is even more important because you see this solid blue line right here. This is the bull channel that goes back to July 14th. Now, if we break this blue support line right here, by all means, I anticipate by Friday, which is right here Friday, that we could be down at 390. I don't have any hesitation saying that if CPI especially comes in bad, and if the Fed shift to a pretty bearish narrative on Monday and Tuesday, that we're going to be at 390 by Friday. So we're still trading. We still have these extreme rising wedges right here. We broke the extreme bull channel, which was this support that was broken right here on Friday. So like I said, the most important levels that are going to watch is 410.3 and 414. Outside of that, for the daily chart, the most important resistance right now is 414.7. We have rejected it 2 times confirmed and closed below it, and then on Friday we failed to even get to it. Outside of that, resistance-wise, this 417.4, which is the daily 200 EMA, this is that curving red line right here, that's the next most important. Until we break this, and I don't just mean like wick over it like we did right here, I mean like break and like close up here like 419, 420, I am not saying I'm bearish, but I'm not going to go bullish yet. I don't think we're going to see 430 until we confirm break out this level. This daily 200 EMA is going to be a battle. Support wise, after 410.3, we have this 407.5. It's a pretty big support level. You can see we hit on it on the 29th and the 2nd. And right now, the 100, which is this green line right here, EMA, is perfectly right there. So pretty much until we break either the 100 EMA or the 200 EMA, we're consolidating. And I suspect we're just going to bounce until we finally break one. So I pointed this out on early in the week with what I was suspecting. And let me draw this line while I'm thinking about it here and show you what I'm seeing. We're actually forming a diamond right now. It's not perfect, but it's there. Let's see. It's kind of right here. So you see what we're doing here is forming this diamond pattern. So that basically means we are peaking. The last time we formed a pattern, which if you look right here, of a diamond was right here And when we finally broke those levels, let's get rid of that one. When we finally broke, I mean, we're looking right here, pretty much identical to this pattern right here. So I'm watching for this to play out. So if we're looking at pretty much identical to May 27th to June 8th, which also, look at this, June CPI was right before CPI. And look what day this was. This was the Monday before CPI, so 2 days before CPI. It's possible that we are about to see a big old sell-off right here. It's almost perfect. We had one day, and then got 1, 2, big peak, 1, 2, big peak. Then you had 2 days inside that peak hitting the resistance line. We had 2 days inside that peak hitting the resistance line. Here we had the third day, which was a massive day, which it looks like we gapped down that morning, 408. Yeah, I mean, we had a huge gap down on that Friday, but the bulls were able to recover it. So we're either going to be seeing that Monday is going to start the red decline and we're going to break this support right here, or we're going to see a big old day like this, and then Tuesday we're going to break support and we're going to bottom out. It'll be interesting to see which way they do. I mean, obviously this, I would be surprised to see it play out exactly the same way, and even the candles are not quite perfect, but once we break this diamond pattern basically right now is when we're going to know which way we're going. So if we break this support, I would not hesitate going longer on some puts, expecting at least 405, if not preferably 390 on a drop. Now, I posted this on Thursday, I believe it was. I talked about all my CPI and things like that. You can see here that June CPI, 2 days before, it got bloody. I mean, we had a negative 1% day, a negative 2.3%, 38% day, and then obviously CPI, big old gap down. And then the next day also we gapped down, which is interesting because we don't usually gap down the day after CPI. Usually the day after CPI, it's not really worth playing anything, but on June it would have been hella good. And then on July CPI, the same thing. We have CPI right here, and then 2 days before, negative 1.1, negative 0.8. We had some pretty big red days, so about 2% drop total over 2 days. We have the same thing here. Here's our May. We had a green day here, but two days before, we had a huge negative 3.2% day. And then let's even look here. April, same thing. We had a negative 1.71, negative 0.2, almost 2% drop. So I'm fully anticipating that Monday and Tuesday at some point combined together will be about a 2% drop. We'll have to see if it actually plays out. This CPI is a little different just because of the way the narrative's shifting, but the significance of a 2% drop for SPY is this 405 level here. From Friday's close, if we were to drop 2% over those 2 days or just on one day or whatever, it would test this level right here. Breaking back below this level into the high 4 or the low 400s like 402, 403, and especially the 390s would be, in my opinion, a sign that we might finally come and retest this support down here, or this gap down here, I mean. I'm indifferent about this CPI. I came into it with a plan that I was going to go and hold puts over the weekend for Wednesday expiration, expecting a huge gap down. Or not huge gap down, I'm sorry. A huge red day on Monday and Tuesday put together, and then closing Tuesday night. The way the bulls fought on Friday night makes me a little nervous. I am holding some Apple puts. They're pretty far out of the money, and they're hurting right now. But those are expiring on Friday. I feel confident in them. I didn't close those, but I didn't go into over the weekend as much risk as I wanted to, just because of how much the bulls fought it back on Friday. There's a chance we could see a bigger push up here to test this 414.6 on Monday. And if that level was to hold again, then I may finally open some risk into Tuesday. If not, I still plan to hold some puts Tuesday into Wednesday. If you read my CPI post, you'll see why. The probability is very high for that. And after this, either tonight or tomorrow, I'm going to look up, and I'll do a post about it on Reddit, and on my Discord about a straddle or a strangle going overnight to see how that would play out. So let's look at the weekly here. So the weekly for me for SPY is way more bearish than the daily even looks to me. So you see we have 1, 2, 3, 4, 5, 6, 7, 8 weeks now of just straight up like looking great. However, this 414 or 415 level, comes back into play. You see we had a big run up here, 6.58% week, and then we had a small negative doji week, and then it dumped. And this week right here, if you look at it, June 6th it started, that's the week of CPI for June. So we have a big 4.28% week, a slightly green doji week. We might just see a big old red week right here and come back down here. It'll be interesting to see what happens this week. Even if it is a big red week, I'm not sure if we'll be able to get to this 390 level. From close on Friday, 390 is, let's see here, calculate this out for us, almost a full 6% drop. It could definitely happen, especially if CPI is terrible, but I definitely suspect we'll break down into like 395, under 400 for sure though. But key support to watch this week is going to be this 409 it's about 408.1, 408.9, which you can see right here. Look at that, 407.6. So we're pretty close. About 408 is going to be a pretty key support to watch. And then this resistance right here, if you see this week here, it obviously didn't just open and then dump. It did test up higher. So that's where I'm kind of under the impression that Monday we might get a retest of 415 area, 415.6. And then if that rejects, that might be a good time to go get some puts for like either a Wednesday or Friday expiration. Just kind of let them ride out. Definitely if we test it and close under it on Monday, that would be a good play. Other than that, there's not much to look at the weekly right now. We're just kind of watching this resistance and see if we're going to form the same exact pattern that we had right here. Go over to futures. So futures, it's looking busy. We got the same red solid breakout triangle right here. Either break out, break down. We have put in double dojis here. There's not quite a double top. It's pretty close to a 41.52 double top though. But this 41.56 level right here, this is key resistance to watch next week. We did, however, which is, I would say, more bullish on ES futures than SPY, is that we did completely reconfirm channel support for this blue bull channel. That's at, 8 week long support channel now. So that actually is more considered a bullish indication to me than it is bearish actually. Had we broke through this level, I would have happily rode some puts over the weekend. But we bounced so hard off that and finished obviously very far away from that. It makes me a little bit more nervous going into puts over the weekend. Like I said, I'm still holding my Apple puts, but that's it. Other than that, key resistance. So we did break this extreme bull support finally. That's the one that I said on Thursday that we broke on SPY, and I had suspected on Friday we would break it for futures, and we sure did. So let's go ahead and get rid of that right now. Cleans it up just a little bit here. Same thing, still have these rising wedges that are looking extreme as all. Key resistance on Monday will be right here, this 41.58 level. As you can see, it's not only been 3 times resistance, but it's also this breakout symmetrical triangle resistance too. Support, it's going to be down here at 41.14. As you can see, if we hit 41.14, we're then obviously breaking 41.27, which is again that blue bull channel support. I will be watching that closely, especially if we see a pretty red futures open on Sunday. If we break this support, it'll be a big sign. Once this support's broken on futures or SPY, whichever one happens first, that should be our sign that it's time to start thinking about going short again. Until then, it's really tough to go short. I highlighted here on Thursday into Friday that we are here, and it darn near looked identical. When we opened on Friday, when it was super red overnight, when we opened, I mean, it was an identical pattern, like spot on. You couldn't have painted a more perfect picture. However, the bulls came back and fought, and closing it up here, they kind of negated this, but doesn't mean that we still don't see some sell-off. I will be watching closely on Monday as if we go there. The weekly, about the same thing as the SPY weekly, nothing real different. This 41.62 level will be the key resistance to watch, and bull channel support on the weekly will be 4100. So keep an eye on those, whichever one we break. Same thing, like I said, I suspect will open probably pretty close to, and maybe even touch 4160 before we start our descent downward. That's pretty much all I got for SPY and futures. We're going to switch over to Apple now. So Apple, along with futures, so SPY kind of, I guess, predicted Apple this time, which is usually backwards, that Apple will predict what's going to happen next. But SPY broke that extreme bull support, and now on Friday, futures and Apple broke their extreme support. So it gets rid of one rising wedge. So technically we failed out of this first black dotted rising wedge here. We have, this one's blue because this is the extreme support, but I guess I'll change this over to red for us just to make it easier. We have the same symmetrical triangle right here. This is one that dates back for Apple to June 30th. This support has not been touched, but I mean, we barely touched there. I wouldn't even call that a touch, but it's only been touched twice pretty much in the last, 2 months now. So, but we are seeing, this will be the same diving pattern right here, downward, upward. So we put, this looks like a pretty convincing top to me, especially having a big old green candle up, a doji, and then a red day. It'll be interesting to see if we hold under 164.5. That'll be the key resistance that the bears have to hold. They cannot lose that level. If they reject this, or especially if we don't even touch it and we just come back down here and finish somewhere near like 160.7 on Monday, I think this would feel like a pretty clear top. 159.8 is going to be pretty important support to watch on Monday too, if we happen to get a big red day. If not on Tuesday, 161 is going to be key support to test this right here. As you can see, we are still in quite a few different rising wedges. I don't really know where this line even came from. I think it's supposed to be a projection off of this one right here, though, to project a bull channel. So it just wasn't lining up because it's a dotted line. Sometimes they're a little hard to line up. But let's go ahead and throw another off this peak rising wedge in here that we can watch for next week. So now we have this, also this resistant line. So as you can see though, we're putting in, this is a pretty convincing top, TP top, whatever you want to call it to me. Here's the Apple Weekly. The Apple Weekly is pretty boring, to be honest. All it shows is that we've been in a pretty much 1, 2, 3, 4, 5, 6, 7, 8 week long bull channel, and it's extreme. This is, if you look at Apple, it's the most green candles in a row since October right here on Apple, but this is pretty much one of the most extreme, if you zoom out here, upward moves that Apple has had since COVID recovery. This thing is straight up. So it'll be interesting to see if this momentum can carry this week. I think eventually we're going to see the bulls get exhausted. I think we started to see it on Thursday, and then Friday they were exhausted, but then they came back in. I have a theory on that on Friday that the jobs report caught the market makers off guard. I think Friday was already priced in as a bull day. If you look at the IV ranking and a couple other things like the VIX and whatnot on Friday, it was already priced in as a bullish day, and that's why we had the movement that we had. And markets historically, when something bad and unexpected happens, prices it in the next day. Even if you look at like FOMC meetings and stuff like that, we will go on a crazy bull run after a FOMC meet, or on a FOMC meeting, like from 2:30 until end of day. It'll be a 2% run, and the next day it'll dump 3%. because the markets are about a day late to react sometimes. So it was the same thing with the Google News and the Apple News. I think it was 2 weeks ago now about on their hiring freeze and stuff like that. Markets dumped, and then they reacted the next day to that news. So just something to think about. But weekly wise, I mean, resistance is all the way up here at 172, and support's going to come in at that 171, or sorry, 161 range. Then we got the old VIX. This thing, man, it just, look at this. I mean, peak on June 16th, and it has just been nothing but unwinding. Obviously, you can see we're forming a nice falling wedge right here. Eventually, this will break. Either we're going to have the actual channel that I have drawn right here, or we're going to get a bounce, and we're going to finally break out. We tried so convincingly, sorry, on August 2nd there to break out, but it just couldn't do it. Couldn't break the resistance. So as much as I am bearish on just overall market because of the world we're living in right now, until the VIX breaks this trend down, you're just wasting money going into puts right now. We gotta wait for the VIX to do something, to show us something. So interesting enough, I mean, we're approaching here. So this is all 2022 starting right here. I mean, we're about to approach, I mean, pretty significantly low levels on the VIX. Levels that we haven't seen since March, which was the end of the bull run right here in March before we obviously shot back up. My thoughts are on the VIX this week that when CPI comes out, we're either going to get a terrible CPI that was unexpected because of the consensus, which is going to shoot this VIX back up in like a day or two. As you see, like the last couple of times the VIX has spiked, which is interesting, it's been super short spikes. So like here we had like a 1, 2, 3 days to the peak. Here, 1, 2, 3 days to the peak. I mean, they're short, quick spikes. It's not like back here where it's this long, drawn-out rise like in January. And even February into March, long, drawn-out rise to the peak. I mean, we're spiking now. It's like an instant panic. But then it's just settling off. So that's something to watch out for. But if we look back at 2021, pretty much this, right about, I'd say about here, 20.6 to about 16, roughly rounded, was pretty much the mean that the VIX lived in for all of 2021, and we're darn near about ready to get back into that mean. So if we do see a sell-off and the VIX gets around this 18.5 level, that's going to be pretty significant, and I'm going to be watching that closely to see if there's a good opportunity to get some like long-dated VIX calls or UVXY calls and see what happens with that, especially if it's getting close to the time for the next CPI and the FOMC meeting. Overall, I had a pretty good week trading. My biggest lessons this week was just I let one put on Wednesday that it was against the momentum at the time, and I didn't recognize it early enough, so I let that one run too far. Other than that, on Friday, I had also opened a put right about here, I believe it was, going into end of day. Maybe it was up here. I don't remember. Oh, I was right about here, sorry. I opened a put. I was fully expecting 410.3, 409 when we put this top in right here. And I was high conviction. I went green for a little bit, and then obviously you see what happened. About here, I did come back to green finally, but it ripped against me. So I ended up closing at end of day. I was going to swing it into the weekend, but I would need to see 409 on Monday just to break even, and I wasn't sure if I was going to get that, so I took a small loss on that. That's my only other regret this week, pretty much, with those two trades. The negative 73%, I let that go to. I recognized it at negative 30. I didn't close it, and then by the time I was able to close it, it was already so far gone. And then obviously the one on Friday, I had such conviction, I was going to let it go to high profit because of the trend that we were in. And then at this point, I had mentioned earlier, we were in extreme bear momentum, and I was not expecting them to be able to break out of that. So Had I just taken that, I would have been pretty close to a green week. That negative 73% is only going to put me into a red week. But overall, I had an 80.9% win rate this week. I had some really great scalps and quick in and outs. It felt good to get back into doing that. I've been, I think, trying to go too long on some positions like I did on the last one on Friday, instead of just getting in and out with my like quick 5 to 10%. So I look forward to next week getting back into some quick scalps and whatnot, and just kind of see what the market does. So it seems like anytime anybody tries to swing anything or go long or get too fancy, the market likes to tell us that we're wrong. So, all right, well, you guys have a good weekend. I'll see you on Monday. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.